Also, just moments ago, the first inflation report of the year came out, coming in cooler than expected. Prices rose 2.4% last month compared to the same time last year, aiming closer to the Fed's target of 2%. NewsNation's Marcus Espinoza, he's on Wall Street with more on this morning's report. Marcus.
Hey, Kelly, good morning. Yeah, really interesting, especially on the heels of that job report that added 130,000 jobs last month there, and then also the fact that a lot of those were healthcare jobs. There's so much to break down here. But talking about inflation, it cooled more than expected. So that 2.4 versus that 2.5%. Here's the conundrum that this creates. The Federal Reserve faces the challenge now of maintaining inflation at its 2% target while also trying to support the labor market as well. So if you take a look, headline CPI rose 2.4% annually. That's a bit lower than the forecast. Core CPI held steady at 2.5%. Aligned with expectations. And then the context here, if you really look at this, many analysts feared for a hotter reading due to the typical beginning of the year price adjustments. So this came in better than expected. However, there's the reports that are coming out and then also the reality on the ground. People still don't feel like the economy is getting better. So the Fed now has the conundrum again of trying to balance whether or not to cut interest rates because these two things, the inflation, the CPI report here versus the job report, they're kind of conflicting with each other because it might end up actually freezing the Fed Reserve from making any sort of action, hypothetically speaking, and saying, well, we're just going to keep things where they're at right now until that new Fed chair comes in. And so there's a lot to consider at this point. So it's good news on its surface, but there's a lot to dig into as well there. So it's really interesting, these reports coming out, especially considering the fact that there's still fears and worries coming up with tariffs and with China as well. So a lot to consider right now. But overall, good news on the surface. But it's interesting to see what the Feds will do now because they want to maintain getting to that 2% inflation, but also want to be able to maintain that job market and protect that as well. So really curious reports back to back from the jobs report and now the CPI report.
Right. What does this mean for another potential rate cut too? All questions at this hour. Marcus, thank you.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.